Hello everyone and welcome to my morning report analysis videos on Thursday the 3rd of January with me, Richard Bear, market analyst at Hantec Markets. The big news overnight, two things really. First of all, the profit warning from Apple. This was the first profit warning from Apple since 2002, and basically it has downward revised its revenue forecast for this quarter to by 5 to 10%, and citing demand issues in China, but also potential issues with the supply chain as well, and hence why we're seeing some significant risk aversion that's coming through equity markets once more. But also we had a flash crash in the forex markets as well, and you can see here Japanese yen significantly stronger, but that doesn't tell you the story of 1% down on dollar yen today. The story comes through the chart actually, where we saw a traded low, certainly on Reuters anyway, at 104.96. That spike low, I'll show you on the minute chart, came overnight at basically 11 o'clock pretty much, and it gapped lower, and it was an enormous move lower that basically rippled through forex markets, and we've seen that coming through, and I'll show you through my chart of the day actually, Aussie dollar, where we had a significant risk aversion, and subsequently the dollar strengthened, although obviously not against the yen, but the dollar broadly stronger, sterling weaker, Aussie weaker, Kiwi weaker, and certainly has hit risk sentiment, which was already under pressure from that Apple profit warning that we saw as well. So subsequently we're seeing VIX volatility higher again, we're seeing yields which are back lower again on the treasuries, and general sort of risk appetite is pretty negative. You've got futures for Wall Street which are 1.5%, 1.4% lower on the S&P 500 today, and that's not so much reflected, earlier on the European markets were a lot lower, but they've rebounded a slight amount. But it'll be interesting to see how these European markets fare once the States opens today. We've also got a jump that we saw in oil price yesterday, which is just unwound a touch, so that continues to remain shackled in terms of the recovery. But the big news obviously has been this flash crash, which has driven significant yen strength today. So in terms of data points, we've got the US data this afternoon, the ISM manufacturing data at 3 o'clock. That's going to be the key focus. This morning, construction PMI doesn't really do a great deal for the UK, being only around about 6-7% of the UK economy. We've also got ADP employment for the US this afternoon at 1:15. 178,000, that's 179 was last month, so basically in line with there. And it has the potential to give a bit of a heads up for payrolls report tomorrow, but recently it hasn't been so much of a good indicator there. So we're looking out for my chart of the day, which is the Aussie yen. Now that has been affected seriously by the flash crash, big sharp move to the downside. That breach of 68.25, let me sort of come out here, that was a multi-year low on the Aussie dollar, going all the way back to 2009. So a really key breakdown on the Aussie dollar, not held obviously, sharp rebound into where we are at the moment, only slightly lower on the day now. But this overhead supply, a 70-20 area that was the October lows, became the support in December as well. That broke to the downside before the flash crash yesterday. That certainly is going to be overhead supply now for any unwinding rally that we're seeing from this, following on from this flash crash. So I think that is going to be an area that's the Aussie is going to struggle to find traction above, I think, in a rebound scenario. And I think that breaking below 70-20 really does sort of open the market for further downside, and retesting 68.25 again, which is that old key low. So further moves to the downside seem to be in order for the Aussie. As I said, it's just unwinding some of this oversold momentum of the flash crash, but anything around sort of 60 area looks to be a selling opportunity on the hourly RSI. Anything that unwinds the MACD also, but I think it's just an unwinding move that's before we're going to see further selling pressure on the Aussie in due course. So with that in mind, I wish you good luck in your trading today, and I'll speak to you later.